We really needed that good but not great non-farm payroll number we got at 8:30 today. This market's got huge headwinds blowing from Washington. Everything from the trade wars to the inability to get a NAFTA replacement deal done with Mexico and Canada to the Federal Reserve's lack of sensitivity to the strong dollar. Put it all together, and the industrial economy just can't catch a break. And that's why the market exploded higher on that robust employment figure. Dow gaining 373 points, S&P soaring 1.42%, NASDAQ surging 1.40%, although it didn't hurt, of course, as I talked about all week, that we were oversold. Look, I know the unemployment rate is down to 3.5%, lowest in nearly 50 years. But it has to do with the makeup of the economy. The manufacturing side of the ledger is just not doing that well. The weakness in manufacturing hiring gives Fed Chief Jay Powell all the ammo he needs to justify cutting the federal funds rate. That way, make it more in sync with the traditional curve of low short rates to higher long ones. Normally, you wouldn't expect the Fed to hit the accelerator with the jobless rate this low, but wages are still stagnant and there's no inflation to speak of. Basically, if Powell's asking himself, why not cut rates, the answer is, well, there's no reason not to. A rate cut could deliver some much-needed help to the ailing auto industry because car loans are priced off short-term rates, but also result in a weaker dollar, giving our manufacturers a big boost against their foreign competitors. Again, why should the Fed cut? Because right now, the 10-year Treasury is at 1.52. Federal funds rate, the overnight rate, is at 2. That's nuts. Powell should be taking his cue from longer-term interest rates here. That's what he should be doing, although he seems a bit oblivious to this very obvious signal, as are most of the commentators who come on TV who think that I'm wrong and he's wrong, and I agree with the president. Now, maybe if we weren't in this trade war with China, the Fed wouldn't need to cut. But that's not the world we live in. I think the president is right when he says the Fed funds rate is too high for no real reason. Remember, a year ago, the Fed tightened aggressively to get out ahead of potential inflation. They should do the same thing right now to get out ahead of potential slowdown. Be just with the same alacrity that they had the other way. That's what they should be doing. This matters because next week's game plan is all about China, both its economy and the trade talks with our government.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.